Elon Musk said a couple of weeks ago, well, I guess last week, that the economy is really strange right now. And today is one of those days when you have to scratch your head. The pundit class is all over the board, with some loving the Fed move to increase 25 basis points today, and others truly hating it and thinking it's the worst idea ever. And of course, I'm in that class. Some are predicting recession next year or even next quarter, and others say that there's no chance of recession. I'm also in that class, but the other side has stats to prove it. Anyway, the main thing I saw this morning that was interesting is one particular headline suggesting it's a very good time to get in long-term bonds before interest rates start coming back down. How long have I been saying that? So I've been claiming for a very long time that the 10-year bond is as low as it is. The interest rates are as low as they are because people are piling into that and trying to get it right now 4.8%. I'm sorry, 3.8%. Trying to grab some of that money before the good times are over. Anyway, this is Randy Kirk. If you like the morning news, hit the like button, hit subscribe, and hit notify. Later today, I'm putting out a report that I call Giga Catalysts. You're going to want to see what a Giga Catalyst is. This is a very, very new idea. Nobody's ever tried this before because why? There's never been a company like Tesla, but you want to see that report. And then I will be out at I will be starting to roll on my video for this afternoon, for late this afternoon at exactly 4:30 California time, 4:35 California time, when the interest rate numbers come out for the aftermarket numbers or pre-market, whatever you want to call it. Around 4:30 California time. So I'll roll at about that time. So that report should be up a little bit after 5, which will give you a complete report of what the Fed did, a complete report of the market action today, complete analysis of what was happening with Tesla today, and also specifically with regard to interest rates. Okay, so this is a weird week, so be careful. But I am buying Tesla. I moved some money around and it hasn't gotten into my E-Trade account yet, but I would have loved to have bought Tesla a couple of minutes ago when it was down 2.65. It is now, last time I looked, it was just barely in the red. Yes, it could go to 255. Absolutely, it could go to 255 again, but just as easily, it could be at 265 at the end of the day. It could be at 275. Today is one of those days. Really, really hard to call. Also, please don't do what I do. Somebody said the other day, Randy, you said to, and I did, and I shouldn't have. And no, don't do what I do. Just take what I say as one piece of information. I am a lonely advisor. I'm not an investment advisor. I'm a lonely news reporter who adds some color, adds my 50 plus years of experience in playing the market. That's what I do. It is one resource. Please look for lots and lots of other input before you make your decisions. And please don't come back to me. I'm going to give you an idea. One idea. That's all I'm doing here. All right. We have Meta out with earnings after the close today. This will be a very carefully analyzed for both advertising revenue news. Is advertising coming back into the mix or not? Obviously, Elon Musk is hoping that it is for Twitter. And they're also going to be looking at it for AI because AI is not useful. The rally can't continue in AI and tech if there isn't earnings associated with this AI boom. AI by itself is not good enough. The market is looking for earnings coming from AI. That's one of the things people are going to be looking at Meta today to see what's going on. Among Elon's many talents, one of those is the use of the press. I mean, he's just a PR genius to keep all of his companies in front of the public mind and in front of the investing public's mind. And a few months ago, I said that the Cybertruck is one of those cases. It will be the most photographed product in history, maybe even beating Marilyn Monroe in terms of most photographed. Now to make matters more interesting, they keep putting on all these different wraps. So now they've wrapped it like a Ford F-150. I saw a wrap yesterday that was in green. I don't know, was that one of Tesla's wraps? A green camouflage, really ugly. But anyway, yeah, it's creating action, it's creating activity, it's creating interest. It is fun to contemplate all the wraps that Elon might try. Do you think he'll do a Barbie wrap? I don't. Anyway, okay, let's go on. So, in other news, consumer confidence is up, and it's the best since July 2021. Good jobs, good income, prices dropping, but some are still worried about a recession. That was really the only holdback on the entire consumer confidence survey. Now, Axios is reporting this morning. I'll just read this. The rally in consumer sentiment, like the rally in the stock market, is looking pretty broad. Okay, when you read things like this, I assume you do this, read them with a critical eye. There's not a broad rally in the stock market. It's not broad at all. It's extremely narrow. That has been the problem. We needed to broaden out. Anyway, okay. It goes on to say the big picture, this upswing has been building all year as inflation has been cooling. It is visible across all income groups and across different national surveys measuring consumer attitudes. That's market research firm Morning Consult's index. It has been this high. It hasn't been this high since December 2021. The Conference Board's index skyrocketed over the last 2 months. The Axios macro wrote about Tuesday. Another closely watched survey from the University of Michigan is up 13% since June. Go deeper. Sentiment among high earners over $100,000 per year has risen the most this year, according to polling data from the Morning Consult. Their mood has improved as the stock market gains have boosted household wealth, and high-profile layoffs in tech and finance don't seem to slow. And high-profile layoffs in tech. Anyway, that made no sense. I don't know why I read it. I should have just eliminated it. High-tech layoffs has been a nothing burger. There's been a few here and there, but nothing significant. Sentiment is improving for middle and lower income groups too, groups that are still seeing strong wage gains. Wheeler notes, in July, sentiment for both groups rose to the highest level since January 2022. Then from Market Watch, a separate thing here, Scott Granis is talking about the Fed's wrong-headed move later today. He's a longtime chief economist at Western Asset Management. And he put together a chart. I'll put a link below showing how the M2 measure of money supply leads inflation with a roughly 1 year lag. So as M2 comes down, 1 year later, inflation comes down. The chart strongly suggests that CPI is on its way to zero over the next 6 to 9 months. As such, it's reasonable to conclude that the Fed has acted appropriately, if belatedly, but that no further tightening is necessary. Lower inflation is baked into the cake at this point. Okay, I agree with this. Of course, I agree with this. But what about the deficit? There he finds that while the COVID-era spending blowout was financed with printed money, yes, we know this, the latest surge has not been monetized. So there's no need to worry about a resurgence in inflation fueled by excess M2 growth. And he's not worried about the broader economy, noting the recent rise in U.S. consumer confidence. Well, he goes on to say, this supports my long-held contention that there's no reason to worry about an imminent recession. The economy is likely to continue growing for the foreseeable future, but at a low, unimpressive rate of 2% or even less. I need to get this guy on the show so he can just agree with me all the way up and down. On the other hand, this is now Randy, not the article. Inflation is showing another significant uptick this morning. It's still at 2.5, so it's not going crazy, but oil is near the high in its trading range, even though last time I looked, it's a little bit down this morning. Gasoline prices are headed up a little bit. And what does that do? Of course, it increases food and beverage costs, which are also up, though slightly. All of the rest of the sectors are fine, but if you want to pay attention to stuff outside of just listening to what I have to say, watch Truflation, look at it deeply, even go into the commodities and see what they're doing. This will help you a lot to understand what's going on in the overall economy and therefore potentially in the marketplace. And then later this week, the PCE which includes the cost of wages that'll be reported this Friday. Super interesting this month. All right. Big techs are split on the big techs yesterday split on earnings. They had some very good up stuff and a couple of down things. We talked about that a little bit yesterday. Continue to watch today. A lot more reporting, a lot more companies reporting today. What the market is looking for there is a general direction. The market is going to want to see that there's better earnings than expected. They're going to want to see that the guidance is good or at least okay. And they're going to want to see that there's no major negatives that they weren't expecting. If we can get through this major earnings season without too many hiccups, then the second leg of the Dow, the second leg of the bull is going to be, theoretically, it's going to continue. Okay. Anyway, I did report yesterday that Spotify had a good earnings report. That I'm 100% positive. I read in an article that was giving a quick analysis of all the earnings that were out yesterday morning before the bell. Spotify did not have a good earnings report, and I either misread it or they misreported it. Sorry about that. There are more earnings coming. So watch the earnings. It'll be important to watch. General Motors announced that the Bolt is being revived. That's the first good thing I've seen Mary Barrett do in a long time. That is a smart move. The Bolt was selling just fine. Why were they going to eliminate it? This could be their first real good move into the EV space. They've got a lot of cars that are supposedly coming out later this year and next year and the next year, but they've had a lot of BEVs that were supposedly coming out for quite a number of years now that have not happened or that have happened extremely poorly. New home sales, those numbers will be out later today. They're expected to be down 10%. Down 10% year over year. Duh, there's no inventory. We've discussed that. You can't sell from an empty cart. That's all I got to say about housing today. Yesterday, I posted a video. I said that nobody would watch, and it was true. Nobody watched it. It was horrible. But it goes deep into the weeds, and I know that when I put these out, I'm not going to get a lot of folks to watch them. I can't tell you how much you should watch this video. Talks about we've had 5 straight quarters of lower productivity. Lower productivity. What does that mean? It means companies are having higher cost of goods and higher cost of overhead compared to what they should have because they're not as efficient as they should be. And when you have inefficiencies in any system, it raises the cost of doing business. Typically, people have to raise their prices as a result of that, and you get inflation. So therefore, productivity negative means inflation positive, or up, if you will. The opposite is also true. The more productive you are, look at Elon Musk and Tesla. It is the most productive, the most efficient company in the world. And what are they doing? Lowering prices. Why are they lowering prices? Because they're lowering costs. This is true for the overall economy as well. And so right now we're going to be going into a period of extremely high productivity compared to the last 3 years. The COVID thing created massive productivity problems where you couldn't move. Well, I go into tons of detail in that video. You should absolutely watch it. I'll put a card up so that you can take a look at it if you want to. But productivity gains over the next year are going to be substantial, not just because of AI, not just because of automation, not just because of all the normal reasons, but because you're reversing the negative efficiencies of the last 3 years. And now they're going back to normal. And that will be a productivity increase, driving inflation down. I think we're going into deflation. Kathy Wood thinks we're going into deflation for different reasons. Other people, you just heard that other report, think we're going to zero. I think we're going to zero or to negative. The Fed should be paying attention to all of this. I don't think they are. I don't know why. Telsa reports that software company Circuit surveyed over 1,000 delivery drivers and dispatchers to find out how they're working to reduce their carbon footprints. The study's finding is that 1/5 of dispatchers plan to switch to hybrid or electric vehicles to reduce their operating costs. Almost 1 in 10 delivery drivers also noted they drove an electric vehicle. Among the EVs available in the market, 51% of the drivers and 38% of the dispatchers preferred Tesla. Following Tesla was Ford, which was favored by 28 and driven by the drivers and 17% of the drivers. Dispatchers 28, 17 drivers. What a difference. Oh my gosh. Tesla, of course, in the lead again. All right, let's take a look here at what is happening at 7 o'clock, almost 7 o'clock here. Tesla is now up again, over 265, could go to 275 today, could go back down to 55 today. Again, I have no idea which way the market is going to go. The market is all over the place today. The Dow has been up. It is now down. The NASDAQ is down slightly. Where it was down a lot. So it is moving toward the green. Everything's all over the place. Google's way up, of course, based on their earnings report yesterday. Apple's down a little. Amazon reporting later today Amazon is down a little. Anyway, sorry, Amazon is not reporting today. It's not. Meta is reporting today. And now let's just take a real quick look at the bonds and all of those guys over there. The crypto is up a little. The dollar has been up a little all week. The gold is up a little. Oil is down a little, but way up at the high end. It's almost at $80. And the bonds are at the 10-year is now at 3.889. It was down a little bit more than that earlier today. Now it is moving back towards positive. Anyway, it's going to be a wild and crazy day. If this has been helpful to you, if this morning show is helpful to you, please hit like. It really helps the channel. Hit subscribe, hit notify. Remember, 2 big reports coming today. Giga Catalysts coming out probably at 11:30 California time. And then at around 5 o'clock California time, you'll get the midweek report, which will include all of the reporting on what the Fed did, what that's done to the bond market, et cetera, et cetera. Meta will be reporting on Meta's results, all that coming out later today. Join Patreon. I think I'm at 89 now. We've gone from 75, I think, or no, low 70s when I started asking you guys to join and see if we can get to 100. This is really going to help support the channel if we can get to 100. So if you've been thinking about maybe getting on Patreon, I just put up new reporting yesterday. I just put up all of these Giga Catalysts, 20 Giga Catalysts. That's already up there. If you want to go take a look, it's free. You get it free for 7 days. And then it's $5 or $10 a month if you decide to stay with the Patreon program. I absolutely appreciate everybody that is currently doing that. And that's all I've got for you right now. See you later today.